that's not really a big issue. Three things you should know about Moneta markets. It's safe. You have all the products that I made sure that you have every single product that you need when it comes to your trading. For example, if you are a stocks trader, you're not gonna find Tesla, Microsoft, and Google. You're gonna find the entire list of stocks in Nasdaq, S&P, and Dow Jones. So that's also the variety of options that we do have in the company. One more thing is the best customer service you can find. Our team is available 24/7, 365 days a year. All right. Before we understand the behavioral traits, all right. So just a quick example. I really love examples. So if you go to the gym, if you do workout, you work out 5, 6, 7 days a week, but you're not improving. So you go to speak to an expert. You ask them, I'm doing whatever needed. I go 5, 6 times a week. What should I do? They tell you that going to the gym is basically 10% of your improvement. I go to the gym 5, 6 times a week, and it's just only like 10 to 15% of the overall improvement. And they tell you that 70% of it is your food, your diet. And they tell you that the remaining is basically your sleeping. So basically whatever you're doing at the gym, the practice that you're doing, you're going at the gym, you're working out, but it's nothing more than 10%. That's pretty much it. That's the same thing it goes for your investment decisions. If you're a trader, daily trader, if you're, I don't care, any decision that you wanna make when it comes to investments, it's 100% for me related to the psychological art. And I believe if you have control of your psychology when it comes to your trading, daily trading, then I think at the end, eventually, you will be having a successful kind of an experience. And by that I mean, so basically, when you follow few things that we will go through, I believe eventually with the practicing, you will be achieving whatever you are looking for. Now, you have, before we go into how to control your behavior, if you have a very perfect, you can control yourself, you're 100% controlling your emotions. But nonetheless, it doesn't matter if you don't know the basics. You know, my favorite quote is the following. I don't know if you're gonna catch it, but let's give it a try. The most important thing is to keep the most important thing, the most important thing. So basically, before you actually practice how to control your psychology, practice how to actually use the psychology in making your investment decisions, your trading every day, make a good out of it, you need to understand that you need to know the basics. Basics when it comes to two things. There's something called fundamental and technical analysis that everyone is aware of. When it comes to fundamental analysis, I say this to every single person I meet in my life. There is absolutely 0% chance that you will be more updated than I am, because I know every single news that goes around the globe every day. The most important thing is to be super updated before you actually make any decision. Now I am going just to connect the dots with one thing that we have covered, which is, again, 80% of the gym, of your workout or whatever you're doing is basically your diet. 10% is sleeping, and just 10% is basically the workout that you're actually doing. I would say the execution is less than 0.1%, because it takes you a second. You can buy a gold any second. But basically, before you do that decision, you should actually take your time. I have a podcast. I told them it's 50 degrees outside in Dubai. 50. You're at work, your manager is like just smashing you, and you're expecting to just grab your phone, let's just make a trade. Do you think it's gonna work? I'm quite sure it's not gonna work because you didn't think about it. You don't know actually exactly what you are about to do. So, technical. What do I mean by technical? My master's degree thesis was about something called efficient market hypothesis. I don't believe that everyone needs to know the very, very deep details about the technical analysis. But nonetheless, you should know exactly when it comes like your decision is made out of two things, the fundamental part and the technical part. At least when you look at the chart, you know what is the basics things. By the end of that, I'll just give you an advice how to do that. It will take you, I don't know, I would say it will take you a week to take a good course when it comes to technical analysis. When it comes to fundamental analysis, all you need to know is basically, you need to understand not only the news, that's the most traditional thing. You just can open investing.com and you can watch whatever data is coming this week. But before that, understand the product that you are trading. I'll just give you an example. I have a client, I know a client, he's a friend of mine. He's, I don't know, trading for 20 years. He only trades on gold. I asked him many times, I love stocks. Why don't you switch? He said, no. Why? I understand how it moves. I don't know, I just understand it. I told him, just explain. Zero knowledge, by the way, nothing. It doesn't, he didn't go to business school, I don't know, didn't take any courses. But he knows the product. He knows how sensitive the gold is. Why? It comes because of out of the experience that he gained over years. So I would ask when it comes to fundamental, it's just basically to understand the kind of a product. First quarter of the year, cacao, cocoa. The volume of cocoa in the first quarter, basically worldwide, is the second one. Do you know this? It's the second traded product in the first quarter of 2024. You know when the prices, they went up for the past 12 months from $3,000 up to peak around $12,000, went back to 7Ks. Now, speculation, basically. So, long story short, when it comes to anything that you want to trade, try to understand it first, because I did ask many of our clients, why are you trading in this kind of products like cocoa? And the answer was, it's very volatile. Is volatility what you are looking for? Then that's the first mistake that you would make if you want to have a long-term trading activities. All right, discipline. Discipline is, I would say, discipline is the most important. Well, by the way, it's very basics, but if you think about it, it's really, really important to keep in mind. Many things actually, you know it, I know it, but when you hear it from someone else, you might actually take a minute and think about how important it is to have your discipline, how important it is to have your emotional control in high pressure. So basically, if you want to have, I'm not going to take too much time explaining what's going on in my mind, but I'm just going to tell you one thing. Trading is out, or investment decision, from my side, I would say it's 98%, it's just emotional. If you do one thing, you take these emotions, there is a big part in finance, it's called financial behavior. It's a study, how do you act basically when you are trading. If you take this out and you exclude this 100%, then you will be safe. How do you exclude this? Well, it's super hard to get it in your first month, 2, 3, 4, 5 years, but eventually it will come. It will come over time, because the very first thing I would ask you to do is to do mistakes, but try not to maximize the mistakes that you're doing, because it costs you money. It's not for free. mistakes. Setting stop losses, managing position sizes, calculating risk to reward, it's all emotions. Now, all the brokers in this event, we do provide CFDs. CFDs, it comes with leverage. So leverage is a very, very dangerous weapon, I would say. When you are depositing $1,000 and you are capable of trading with 100Ks, that's very dangerous. Because the rush that you would have, the confidence that you have, everyone wants to be a boss. Everyone wants to have this kind of power. But the thing you would understand after a few times, so basically I just want to say something about few times. Few times there are two different kind of people when it comes to trading. People who just, all right, let me give it a go. Try with $1,000. He loses out, thanks, goodbye. And someone who really wants to make it, doesn't matter, loses $1,000, comes back. Learn from his mistakes, but he just keep going. The most important thing here is basically this is very, very important, to stop when you have a stop loss, managing your positions. Let me just give you a quick example. You deposit $1,000. You do this, and I'll just leave my number at the end. Just give me a call if you lost money. Use 10% of your account, 10. Don't use more, just 10% of it. I don't care how bad is your decision. It's super bad. Gold is gonna go up 6%, and you shorted the gold, but you used 10%. That's pretty much it. Can you explain for me now or maybe later how you're gonna lose if you have a stop loss? Use 10%. That's pretty much it, which is $100 out of your account, and you have a stop loss. How are you gonna be losing? But basically, this is stuff which we all know. I would say just 2% would do it. The rest, just ignore it. 100% wouldn't really care about this kind of stuff. The last one is a very important one, calculating risk to reward. Now, gold prices are at the peak, all-time high, historical all-time high. When I go on TV and they do ask me, what do you think about gold prices? I just say the following. I believe risk to reward, it's not worth it at the moment. Because stepping into buying gold at all-time high, it's not really worth it. You know why gold? I know this is not the topic, but I love discussing the market. Do you know gold, why it's not going down? Ask yourself one question. If you bought gold at 2,200, let's say, why would you sell? Why would you go out now? There is no reasons in the market right now. Tensions in the MENA region. Something is gonna happen. There are fears. Goldman Sachs, JP Morgan, and Bank of America, there are chances between 10% to 30% of recession, first quarter in 2025. Why anyone would let go? But what do you think is gonna happen when they start letting go of their positions in gold? It's gonna go down. So basically what I'm saying is, when you calculate your risk to reward, it's very, very important. Nvidia, $1,000, you wanna buy there? What happened next? Correction of 17%? More? 31%. It's a good company, but should you just go and buy at all-time high? So that's a very important point here that you should ask yourself. Importance, I have just a minute left. We have covered this. We have covered this as well. Yes, just one more point. I think at the beginning I told you, I said this, and I'm just waiting for you at booth 61. If you think you're more updated than me in the market, then come, let's have a talk. I don't think you are. And this is a very important advice that I would give you. Read. Instead of just TikTok or, I don't know, whatever you're doing that you're just wasting your time with, read about the market. It's very critical to think about this. This thing actually will bring you money. You want to make money? You will make money. but try to do it right. You don't actually just like buy, yeah, this guy told me I'm just gonna make money by buying gold. Don't listen to anyone, listen to yourself, educate yourself, read more, practice more, and you will be fine. Conclusion. Conclusion is, again, I would say your emotions interferes in your trading journey more than, I would say, 95%. I don't want to say 98. 95% of it is just purely psychology. And you will get to learn over time that what I'm saying is true. I might be wrong, I might be right, but this is what I believe 100%. This is how it works for me, this is how it works for the people that, and don't actually, I'll tell you just last story and I'm just gonna leave. Google it. People at JP Morgan desk, Bank of America desk, Goldman Sachs desk, they actually go through exams every week just to test one thing, that they have zero emotions when it comes to trading. Zero, nothing. I don't make my decisions based on like whatever emotions that I have. I believe it's gonna go up. I believe it's good for you. If you are talking about stocks, did you go through the past 5 years when it comes to their financial statements? Leave whatever you think for yourself, act based on whatever like numbers, facts that you're having, quantitative and qualitative. That's pretty much it from my side. We are at booth 61, Monitor Markets. If you have any question, if you want to have a talk, I'm too expensive to talk to outside. So if you want to have a free talk, you can come over to booth 61. Thanks a lot for your time.